everyone, and thank you for watching my videos. So far, we talked about how to develop a trading plan. Then, we talked about developing a trading style. So in this video, I want to discuss with you how and why it's important to develop a trading system. Now, there is a difference between a trading plan and a trading system. So my objective in this video is to help you distinguish the difference. Now, first let's talk about mechanical trading systems. Now, a mechanical trading system, there are systems that generate trading signals for a trader to take, and creating systems isn't that difficult. So what is difficult is following the rules that you set when you develop your system. So it goes back to my previous videos where I talked about trading discipline, because discipline is the key to making sure that our plans and systems work. Okay, so again, we're going back to trading discipline. Now, about your trading system, here's what we need. We need to establish two goals. Our two goals should be identify trends as early as possible. So that goes without saying, because the earlier we get involved in a trend, the more of a profit we make. Also, we want to be able to avoid surprises that hurt your account. So what we have to make sure is that we are abreast with what's happening in the world. We're paying attention to the news, and we're paying attention to the release of key data numbers. So we're not caught in a frenzy when the Forex market is out of sync. So we want to be prepared for that. Okay, so how to design a trading system? Well, first we have to consider the time frame and what type of charts we're looking at. Are we looking at a longer time frame, or are we looking at a shorter time frame? So that gets factored into your trading system. Also, finding indicators that help identify a new trend. Okay, different traders use different technical indicators, so we have to figure out which ones work well for you. Again, when we open up our demo accounts, you can try all of them. Whichever works the best for you, use that, or whichever groups of indicators work well for you, use those. Find indicators that confirm trends. So again, we're talking about catching the trend in the beginning so we can make our large amounts of profits. And we also have to be able to manage our risk as well. And we also need to identify the perfect places to enter and exit. Well, I shouldn't say perfect, but the most likely places to enter and exit. We need to know where those are. Okay, also we should write down the system rules and follow them. So again, we're reverting back to discipline. We need to know what type of system we should have and only use that system. Okay, testing your trading system. This is important. So what we're doing here is we're examining charts from the past and applying that to your trading system. So what we're doing is we're taking the information from how the currency pair has done in the past, and also whatever past experiences we've gained, we can apply that to determining where and when we should get into the market. Also, we need to record all successes and losses. For each loss, analyze them so you fully understand what went wrong. So we're going to take hits throughout our experiences as investors. We're going to be successful in some investments. We're going to fail in some investments as well. But every time you fail, you must analyze your failures and determine where and how you failed. So we learn from that experience so we can be more successful in the future. Also, practice on a demo account. And I can't stress that enough, because we make our mistakes in the beginning when we don't risk real money. Make your mistakes when we are trading with virtual money, so we only make a few mistakes when we actually have our capital in the market. Thus, making our profits bigger. Okay, so let's learn how to build a trading system. Trading setup. So here's a sample trading system. Now, these numbers that I've plugged into here, these are just sample numbers. You don't have to use these numbers. It just depends on you. But I just plugged in these numbers so you can see how a trading system works. So we determine which type of trader style we want. Are we going to be scalpers, or are we going to be swing traders, position traders, day traders? So let's say we went with swing trading, okay? Now I'm not suggesting you should try being a swing trader, but this is just an example. Okay, so we're setting the settings for simple moving averages. So we're going with a 5-period SMA applied to the close, as well as a 10-period moving average applied to the close. And the stats on our stochastics are 14, 3, and 3. And let's go with the RSI of 9. Again, this is just my numbers. You can change your numbers to however you see fit. Now, here are the trading rules. When we enter long if the faster moving average crosses above the slower moving average. In this case, the 5-period crossing over the 10-period, and both stochastic lines are heading up. Do not enter if they are already in the overbought territory, and the RSI is greater than 50. So we have these rules, and they're strict rules. Again, we're looking for crossovers in the moving average. We're looking for where the RSI is, and we're looking for the position on the stochastic. So we're sticking to those rules, and we're sticking to those guidelines. And if we deviate from those guidelines, the chances of being successful in our strategies reduces. So we want to have strict rules so we can be successful traders. Also, we enter short if the faster moving average crosses below the faster moving average, not above in a long entry, but below. And both stochastic lines are heading down. Do not enter if they're already in the oversold territory, and the relative strength index is less than 50. So we have strict rules on when we can go long, when we can go short. And we have strict guidelines on when not to go long and when not to go short. We must be strict with our rules. If we deviate from these rules, it hurts us. So be strict with your rules. I can't stress that enough. Now, let's talk about exiting our positions. We exit when the faster moving average crosses over the slower moving average in the opposite direction of your trade, or if the relative strength index crosses back to 50, and if our stop loss hits 100 pips. Okay, so now let's put that system to the test. So again, we're monitoring the simple moving averages, and we're going to apply those to the daily chart to help us identify the new trend. And the stochastic determines whether or not it's okay to enter. So again, we're working with 3 indicators here. Now, again, as I mentioned before, whatever indicators you want to use that you're familiar with or whatever you're comfortable with, use those. But I've selected these 3 indicators so I can show you how a system works. Okay, so the amount of risk is determined. The higher the time frame, the more pips you should be willing to lose. And entry and exit points have been determined. Okay, so now let's put this on the chart. So here we have the faster moving average in red, the slower moving average in blue. And we're looking at the euro dollar, and we're looking at the daily chart. On the bottom here, we have our stochastic, and we have our relative strength index. And here we have a signal. Here we have the relative strength index down here, which is greater than 50, and also on the RX, also on the stochastic, we have a crossover and another crossover on the moving averages. So maybe this is a perfect opportunity to go long. Now remember, as I explained my rules, when I see all three indicators giving the same signal, that's when we enter the market. And here, we have all three indicators giving me the signal to go long. So remember, we're waiting. We're waiting for all three indicators. And remember, we have to be strict with our rules. Even if two indicators are giving us a signal, no. It must be three. Because trading discipline is what helps us earn our profits and reduces our loss. And as we can see, after following our rules and we enter the market, and here's another example. We have three signals telling us that we should go short. So let's see what happens. And it does go short. It crosses over, and we are now in a bearish trend. So again, discipline works. Having very strict rules on when to enter and to exit, that's what helps us maximize our profits in this market. Okay, so we have the three signals, and it does appear that the market is in a bearish trend. Let's see what happens if we short this pair. And we're very successful. See, again, what we're looking for are all three signals in accordance with the rules of our system. Okay, so again, here's what we've learned. We've learned that there are three phases for testing your system. Number one, go back and time and move your chart forward one candle at a time. So again, we are comparing what happened in the past and what happened in the present. And we're also expanding our time frame as well. So sometimes we have to look at a longer time frame, a shorter time frame, in order to get a different perspective of that one currency pair. And if it's profitable, then you trade your system live on a demo account for at least 2 months. So test your system to make sure the system works before you use your real money. And if your system's not working, then make changes, make improvements. And don't stop making improvements, because the more improvements you make, the bigger your profits and the more minimal your risk is. So you can never have the perfect system or the perfect plan, but you can always make improvements. So that's the kind of mind frame that you should have as an investor in the Forex market. What can I improve in my performance as a Forex investor? And also, once you've demo traded your system for at least 2 months and you're still profitable, then you are ready to trade your system live with real money. So remember, discipline is the key. Having that system that's right for you, and having your plan that's right for you, and having your trading personality, your trading style that's right for you, all of those will come together, and that can give you a tremendous advantage when you're investing in the Forex market. And again, always be willing to make improvements, because the more improvements to your system, the more successful your trades will be, and the less capital you'll lose if you take the losing end of an open position. Thank you for watching this video, and good trading.